Do I need to remind you? Do I really need to remind you how much sales headcount they have that are actually experienced and they're able to close these deals, big deals? What's up, everybody? So it's the 19th of February 2022. Welcome to my channel, The Bliss Life. This is Jet. What I'm going to be doing today is really leveling with everyone, and this video is clearly about Palantir. I've had 2 days to think about what happened, and the truth is, I think it's just an overreaction. And some of you might say, well, of course you'll say that. You have a position in Palantir. But I'm going to level with you in a real frank way, and I'm going to run through the numbers. And I'm going to tell you, if you were a buyer before and now you're not a buyer, then something is wrong with you. And we can work through that together. But what I'm going to do right now is I'm going to say, these are the bad points from the earnings, and these are the good points, and these are the things that I'm actually looking forward to going forward, and this is the direction I think the stock is heading. So if you want to hear that, definitely stay tuned. We're going to get right into it. So right now, what we're going to do is we're going to run through the highlights, and in the highlights, I'm going to carve out what I thought was consistent and on message, and what I thought was a bit of a surprise or a bit unusual. So let's do that, and then I'm going to go through the accompanying remarks that the company posted. And obviously the accompanying remarks, Alex Karp didn't touch on all these points, but I think it's worth that we look at it together so that we could have a worthwhile experience together, where we gain some knowledge and say, okay, well, do I buy? Do I hold? Do I sell? Do I run for my life? So let's do that together, and let's get started. So Palantir's earnings, what are the key highlights? Okay, first things first, without a doubt, is the guidance. Like, look at the guidance. Guidance is consistent. Management's being consistent. They said annual growth of 30% through 2025. So till the end of 2025, they're hitting 30% growth. Why do I say this? Because I've been seeing it in the discords that some clowns or some people are really so hurt. They're so heartbroken that management is guiding for 443 million revenues. And if you look at Yahoo Finance for March, this was, my bad, what was this? This was for March, Q1 2022, March. And in Yahoo Finance, the previous year, it was 341. So 341 to 443 is 29.9% growth, 30%. But some people are just losing their minds over this. Like, oh my God, only 30%? How could they only be growing 30%? Management guided for 30%. How could they only be doing 30%? Like, dude, sit down. Stop being so immature. Stop being so short-sighted. Management guided for 30%. The fact that they're showing that they're going to aim for 30%, they're tracking for 30%, that's all you need to know. Like, I would be more worried if they said, oh yeah, Q1 is going to be 341. We're going to do exactly what we did last year. Then that's like, holy shit, that's not even 30%. That's like negative, and they're not even growing. How are they going to hit the 30% mark? It becomes impossible. But they're guiding for 30%. So sit back, relax, enjoy yourself, and don't make a big deal out of this, because you should have known this before. This is not new. And anybody who's saying management is sandbagging, and they should have told us it's going to be much higher. No, management told you 30%. Management clearly said if you're looking for high growth, GTFO. Management also said if you're looking for the stock to rip in a matter of weeks, to GTFO. And this is going to be a process that takes time. And the fact that management guided for 30%, if they beat, yeah, that's great. I'm expecting them to beat because I think management's highly competent. But I'm not expecting them to play stock market games and say, yeah, 30%, woo, 40%. No, now we're doing 50. No, I don't expect that. If they say 30, just stick to the plan. 30%. And if they beat, they beat. and that's it. So that's that. Okay, I'm gonna put this down. I'm gonna put this to rest because it just annoys me and it sickens me that people are whining about this, because it is not a reason to whine about at all. Okay, so that's that. Okay, now let's go right up to the top. Key takeaways: total annual revenue growth 1.54 billion, grew 41%. That's huge. Quarterly, year over year, 34%. Nice. Now, where do I see the most exciting part here? Closed 64 deals, 19 of which are more than 10 million. This is what I take away. They closed 64 deals in the quarter. They added 34 net new customers. So people left, some people left, great, but they were able to close 64 deals with these customers and existing customers. So this goes to show that the acquire, expand, scale for new deals, new opportunities with existing clients, it works. The model is sticky, it's working. And do I need to remind you? Do I really need to remind you how much sales headcount they have that are actually experienced? And they're able to close these deals, big deals. You don't close big deals overnight. It's not Adobe Photoshop where you say, yeah, send me $60, bro. And then, you hit the download button and then we can talk about the monthly subscription price later. It's not that. It's not that. So people need to understand the business. People need to understand what's being sold, what's the product offering, and how complex it is, and how sometimes it does take the ability to pitch. That's why Palantir has a competitive edge, which I mentioned in the 7 moats before. Palantir's competitive edge is they got money. They got money and they can take the risks to go after complex problems, to convince people who are on the fence to say, look, we'll let you try our product. You'll see that our product actually works. And once that pilot phase is done, then we can make a deal. But most of the time it works. And this is why they closed 64 deals. It's not a joke. I'm not making this up. This is right here. So now let's continue through the rest. The other points are GAAP net loss. I'm not talking about the net loss. I'm talking about management clearly talking about GAAP. What they haven't done, and this I know is a fact, is they've never spoken on getting to GAAP, like profitability. That's something they haven't done before. They don't talk about how to get to profitability. It's never been done. I know that they've never done this before. And if they have, then you can call me out in the comments. I love to be called out anytime. I love to learn. So here they say, look, this is our path to profitability. Their GAAP gross margin is hovering around 78%, 80%. But once you carve out the SBC, it's a lot higher at 83%, which is very healthy for a software company. Their operating margins, they're at negative. It's all negative. Oh, so ugly. But look at this. Over the year, over the quarters, they've been improving. 49, 33, 39, 23, 14. Telling you, this I really have a good feeling that 2022 is the year that they cross this GAAP profitability, because it's not salaries of headcount that's fucking doing this. It's the SBCs and the unusual amount of expenses that had to be recognized because of these SBCs that were vesting in the last 2 years. Okay, so adjusted cash income from operations 124 when you carve out the SBC. Cash from operations is 93. Adjusted free cash flow when you carve out the SBC 104. Let's look at full year highlights. That's a big one for me. Commercial revenue grew 34%, 645 out of 1.54, and 897 for government out of 1.54. So anybody saying they don't get enough commercial deals need to sit down. Anybody saying that they don't get enough government revenues also need to sit down. Like, these growth numbers are huge. 47%, 34%. It is important. These are important numbers. Not everybody can pull this off when we're working with huge denominators, you know. It's not a B2C product, right? It's not like, you know, for Apple iPhone, you know, Apple iPhone, like all you have to do is go into a new market, expand channels in a new market. And that drove people off the rails. Like when Apple moved into China, and China is a huge market, 1 billion people. But, you know, you're investing in Palantir. It's a B2B business, right? And it's a B2B business that is heavily focused on government deals with Western allies and commercial deals. So they can't, you know, the total addressable market will be limited to some extent. Like you're not going to see Palantir dealing in Russia. You're not going to see Palantir dealing in North Korea or China. But these are markets that I really don't care about. Like they're not countries that align with my Western values. So these are not real markets for Palantir to pursue when they're pursuing multi-million-dollar deals with the US government. It's just not good for business. So let's keep going forward. Now here, the adjusted free cash flow, 424 million. This is big, 424 million. Okay, it's not, you know, 424 million. It is still, you know, the market cap is like what, 50 times 424 million. This is a big difference. You know, it makes sense in a growth company. Like this is supposed to be a high growth stock, and when it's a situation like that, then there's a lot of premium baked in. So even right now, like some of you might say, well, 424 million, like that's kind of high. Like I mean, the multiple of 50 times cash flow is kind of high, but the way I would say is like compared to other companies that are high growth, and you will see it is very, very similar. So Snowflake, $82 billion. Okay, $82 billion market cap. Okay, great. Let's go to Snowflake's Yahoo Finance. Okay, in here we're gonna see some good information. So here they got the annual cash flow. Do they okay, yeah, they do. Okay, so operating cash flow negative 45 million. Okay, forget about it. Let's just stop right there. That's fucking embarrassing. Okay, do not swear. Okay, so this is a quarterly. So let's just assume their quarterly is good. Okay, their quarterly. So October 31st, 2021. That's the last one they have. So they're generating 16 billion in cash flows. So 16 billion in cash flows from ops. Okay, that's per quarter. So let's normalize that. Wait, is this billion? What am I saying? 16 million. 16 million. Okay, that's what I was like, what? Okay, 16 million, because these are in thousands, right? So they're generating 16 million in cash flow per quarter. So let's just say 16 times 4. Let's say it's consistent. If you want to even do it for fun, let's give them double that, double it. So you know they're gonna kill it. They're gonna make 128 million per year. Okay, 128 million. And we were able to see here that the market cap is 82, so 82 million. So 82, right, divided by 128, 82 billion, sorry, divided by 128. So Snowflake is trading at 640 times cash flows. So it's a big difference, right? 640 times cash flows from ops for Snowflake, and Palantir is at 51, which we saw earlier, which was 22 billion divided by 424 cash flows. So all this to say, you know, I'm not gonna do the you know, whose thing is bigger or whatever. Like I don't care about that. It's more like, it's just to give you an idea. Like high growth stocks do have a premium, and when they do have a premium, people, you know, these multiples do get a bit higher. So with that being said, let's just run through whatever else points I want to mention from the earnings highlight. What am I doing? Oh, yeah, that's the wrong one. There you go. Same thing that we mentioned. It was just, it's put in a chart right now. Adjusted EBITDA, that's good. Almost 500 million. So $500 million in adjusted EBITDA. That's great. And that's it. So these highlights, okay, this is a good highlight. Gives you a good in-depth understanding. This, you know, the audited financials are not out yet, which is kind of consistent with what we saw last year. The audited financials last year came out around the end of February, so February 26th, if I'm not mistaken. Palantir, there you go. There you go. Okay, so last year's 10K came out on February 26th. 10K is just your annual report. So I'm expecting that it would be similar. I actually sent a message to investor relations, but let's see what happens. But they're just giving us a sneak peek with all of this. Okay, this is not audited yet, so these numbers could technically change, but they shouldn't. They shouldn't. All right, so now I'm going to get right into the accompanying remarks. This has so much juice, and you're actually going to really enjoy it. But what I'm going to do is I'm going to make another video for that, and we'll check it out in a bit. All right, so see you.